Welcome to the Trader Merlin Show with your host, Merlin Rothfeld.
Hello everybody, welcome to Trader Merlin. Yeah, it's another Monday out there, another exciting Monday. I didn't think this was really a shocker the way the markets turned today, although it was a much, heavier sell-off than anticipated. For the show today, I'll give you a little bit of heads up what we're going to cover. We have no guest today, which means I'm in studio, although I will tell you we're going to have Sam Evans on the program tomorrow. We're going to have Bill Addis on the program on Wednesday, Tilly Allison on Friday. So we got some great guests coming on this week, so you don't have to listen to me just sit here and talk for 30 minutes straight. Also, we're going to do a little market wrap, go over our top 7, and maybe sprinkle on the 8th because it was noteworthy what happened in the Dow out there today. Also, give you a little bit of the macroeconomic perspective. And then we're going to kind of dive into our topic du jour, which is really focusing on pandemics. Obviously, this has been a major issue for us in America. I have the feeling, I think some of you might agree, we are probably on the verge of a complete shutdown where the government says, look, we're going to basically, you all got to go quarantine, stay home, businesses are shut, etc., which could be crazy for these markets, which I think we're already seeing that. I don't know if we'll get to the point where we see tanks arriving on the street because who's going to want to go outside anyway? So that will be our program for today. I encourage you guys to send in comments, questions, join our discussion. We're broadcasting right now live on our YouTube channel. So I'd encourage you to go over to that YouTube channel and join the discussion with our viewers out there. Usually got a pretty active audience. Hello, Big Eb, Frankie Shops, welcome back. Mark, Trent, we got a big group, and Brendan as well, and Siraj, welcome back, my friends. Keep those questions coming, participate, and feel free to share these links and like them as well if you do so, in fact, like them. Okay, let's start off with our overall markets and go through our top 7 because it was kind of crazy out there today. I will bring up some charts here. And one quick thing, as TJ will bring this chart up here, we'll start with the worst performer, which has been either the worst or the best every day for the past couple weeks for our market update, and that has been the 10-year. Now, we did have a listener question. It says, could you switch this over to a white chart? It says the black charts or dark charts are a little bit hard to see. You know what? I will do that for you. Since you've asked, Hassam asked for that one, why not? Unless I get mad kickback from everybody out there that says, I really did want to have dark charts, I will go to Clik, which is super simple. You can just click on the appearance tab up here and everything changes over. And there is your white. Hopefully you guys like that better. Let me know if you guys like that one better than the dark, and I will leave it that way. If I get backlash from everybody saying, I want them dark, then I will switch them back to dark because we are a democracy here in the studio still. Yes, Frankie says Manic Monday. It is definitely a Manic Monday, although I think we could just say it's just manic trading weeks. I mean, these are nuts type of weeks. I feel really bad for somebody who just started to learn how to trade in this type of environment because if they don't have a neck brace on, they're broke. All right, starting things off. The 10-year was the worst performer out there today, down 23.45%. It doesn't look that bad, actually, because you see the way that these candles move, but these ranges are huge. We've been seeing 20, 30, 40, 50% moves on that 10-year with regularity. Today, the yield dropped 23.45% to 0.728. So for those of you who are looking to refinance, congrats. It'll probably continue to get cheaper. The interesting thing is, as this country goes into a shutdown, many of you won't have jobs, so you won't be able to refinance anyway because you have no stated income. Gotta love that one. All right, number 6 goes to the Russell 2000. Here is the RTY futures off the cliff. I mean, this thing is just plummeting. Did not think we would see it fall this much. It's certainly a shock to me. I was expecting a black swan event at some point here in the near future. Just didn't think it would come this fast. Now, for those who want the actual numbers on the Russell, it was down 14% today. Yeah, if you're holding small caps, you got smoked out there today. It's funny because on Friday, you're probably thinking, I did great. I'm up 10 or 11, 12%. Yeah, well, you gave back 14 today. 1,073 is where it closed at. It's down another 13 points right now in the after-hour session, so it is still continuing to fall very aggressively. Not looking so good out there for those of you who are holding long positions right now. That was number 6. I'm actually an honorable mention. I'm not going to give it a number, but just to bring up the chart of the Dow here, simply because of the numbers that we have seen. As you guys know, I thought it was a fun poll to do at the beginning of the year, asking how many of you thought we'd have at least one 4-digit up or down day in the Dow. Little did I know we'd have, 5 or 6, maybe even more than that of them already, and we could see even more as this year progresses. Today was an interesting one. 2,997 point drop for the Dow Jones Industrial Average. So for those of you out there that are still continuing to be very bullish, I'm pretty sure that let's say 13% drop in the Dow took a nice chunk out of your 401ks. Let's be more proactive. Hello, Jorge. Good to have you out there, and Luis as well, and Arvin. Welcome back, my friend. So 21,188 is where we finished at, and that might be like a sharp stick in the eye, considering that for many people you're looking at that $30,000 mark, right? Or 30,000 mark. We were at, what was the high there? 29,543, I believe, was the high for the Dow. And yeah, I don't think we're going to see that high this year again. I think we're going to keep on selling off for a little while. All right, that was not a number because I just added that one on because of the crazy sell-off of almost 3,000 points. We'll go to fifth place, which is the NASDAQ. Here is your NASDAQ 100. Also, just a viciously ugly chart. We had this, I don't know what this would be called. It's the opposite of a tweezer top. If you look at candlestick formations, you have this green candle just completely sandwiched by two gigantic red candles. Just amazing intraday trading out there. I actually got stopped out on a couple short little trades I was taking, and yeah. Well, I did okay on my American Airlines, but yeah, got stopped on that one. And XOP I did well on today too, but net loss for me on the day, unfortunately. Let's see, NASDAQ was at 69.04, slide of 12.3%. The real interesting one for me was this guy here, the S&P 500. If y'all went out to my Twitter feed, you'll see that there was a post I made earlier actually I think it was late last night, where I was asking people, which breaker do you think is going to get hit during the regular market hours? Are we going to see any of them get hit? Are we going to see a 7% slide? Are we going to see a 14% slide? Or sorry, 7, 13, or 20? And there is that Twitter result poll. So apologize for the verbiage here, but it says, what's the highest circuit breaker that will be reached Monday? Of course, this ended early this morning. 8% said no breaker will be hit. Of course, many of you are thinking of the pre-market one. That's not a breaker, that's a lock limit. Breakers are going to happen during regular market hours. So 7% I put, that's going to sting. 28% of people thought we'd hit the 7% mark. 13% shit's going to hit the fan. 44% said that was what the answer was going to be. I actually put myself in the doo-doo hitting the fan category as I was watching it pre-market. And then 19% said apocalypse. As you guys know, the apocalypse scenario would be that these markets go lock limit down, final, and they don't go below 20% for the day and would close all the way through the end of the trading day. And we did not get there. What's very interesting, I believe, if my numbers are correct, we actually were down 12.91% on the S&P today. So the doo-doo did not quite hit the fan. No criticism for spelling error. Are you talking about me? Did I make spelling errors in here? I am not. Did I make spelling errors? Come on. Don't pick on me, Anthony. I don't know why I made a spelling error in here. Anyway, that was the poll that was done today. Take a peek at what happened with that S&P 500. Just aggressive sell-off. Right now you're at 24.12, and when we closed, we were at 23.86. So you're seeing a little bit of a rally up in the after-hour session on the S&P. It's still a slide of 11.98% during regular market hours, or 324 points. Now, it's funny because we've had days in the past where the markets will move maybe 20 points, and you're going, oh gosh, it's kind of a flat day. Yeah, you're at 324 point movement today on that S&P. Amazing. And that's not even the podium time. The percentages get a little bit better with regards to loss when we look at crude oil. I actually thought crude oil might rally a bit more, but no, gave back a lot of ground today. 9.83% slide for crude oil today. I do still think you're going to see this gap fill, which could put crude oil back up around that $41 mark. But for right now, not so good. $28.61. Again, this is further going to exacerbate the fracking problem in the U.S. for all U.S. refineries and fracking companies in Oklahoma, in Wyoming, in Texas as well. So this is not going to be very good. All right, number two, going to cryptocurrencies. You know, this was an interesting discussion I had with a friend of mine over the weekend saying, well, why do you think Bitcoin's crashing so much? Why shouldn't we just buy this? This is the safe haven. Well, Bitcoin on the day was down 5.31%, finishing at 4,925. And here's what I think is happening. Bitcoin was viewed as this safe haven should the markets go through a systemic failure. I think we could all agree that right now we're having a systemic failure. However, it's not a normal situation like the financial crisis. What we're having here is a complete shutdown of everything across the board. So what's happening now is people are saying, I need cash. I want money. I'm afraid. I'm panicking because I've seen this in the movies, and there's runs on banks, there's runs on grocery stores. I was actually going to post some pictures from last night when I went shopping. I've never seen anything like it. I actually worked in the grocery store industry for 5 years when I was younger. I worked night crew and I filled the shelves. Even when we were remodeling, the shelves were not that empty. We remodeled a section to be completely empty. This was from beginning to end of the aisle, not one item on the shelves. It was just crazy. Guys, they're not running out of food. They get stocked every night, so there will be more food coming in. Relax. It's not the end of the world. So what happens now is I think anything where people had paper profits, and certainly there was a ton of paper profits in cryptocurrencies, a lot of people saying, you know what, I want to cash out. I want to get cash in hand. I was talking to a colleague of mine today who said that they went to the bank this afternoon. This is today. A major bank, Wells Fargo, and said, you know, we want to make a withdrawal. And she says, oh, you're different. And he says, what do you mean? He says, well, everybody else is taking all the money out of their accounts. So people are just really panicking, going into cash mode. Relax. It's not going to be that apocalypse that everyone's making out to be. If we could just shut off the media or find the media for spreading this fear, we'd probably be in a lot better place. Certainly we do need to be careful with the coronavirus, but anyway, I'm not a doctor, so I'm not going to pretend to be one. All right, that was number 2 was Bitcoin, down pretty aggressive, but we have one that's kind of positive, I guess. Gold was the happy guy out there, and it still was an ugly day for gold, down 0.84%. You know, even though you're down 0.84%, you got to be happy with that one. It's the swing on gold we saw today, some pretty wild moves. Right now it's actually at 1511. It was at 1504 when I took the reading, which put it down about 0.84% on the day. All right, there you go. That's your top 7 markets and market update. Hopefully some of that put some green into your pocket on the session. Let's see if I have any other real quick questions I can answer before I get to our topic du jour, which will be looking at pandemics and kind of a history of pandemics. Will said, if I have securities in Ameritrade that is larger than the 500,000 SIPC limit, is it safe? Ameritrade claimed that they have Lloyd's of London insurance that protect each client up to 149.5 million in securities and 2 million in cash. How much can I trust this London insurers? This, I don't know. I'm just going to give you my own personal 2 cents on this. What I would do if I was in your situation is, since you are under that umbrella of 500,000 SIPC insurance, I would make sure that my account is not over 500,000 in that one. I would keep it right up to the limits. You know, it's assuming you can even trust that SIPC insurance to be there. It's nice that they say they have the Lloyd's of London, but I just don't really trust that. We've seen companies go bankrupt before. We've seen major names go bankrupt before. I'm a skeptical person that doesn't believe that if the system were to collapse or something were to happen, that London insurer would just, you know, not go insolvent themselves. So I would just split it up and stay within the limits for each bank. So let's say you have $1 million out there and you're keeping it all in that Ameritrade. Well, just split it. Put 500,000 in Ameritrade and put 500,000 in another, or split it where you have 3 different ones. To me, it's about spreading around that risk. You just never know what's going to happen, and I'd rather have maybe one little account go down versus one of multiple accounts go down versus one giant one that has all my assets, and maybe I'm stuck there. So, well, that's my answer to that one. Let's see. What happens to those people who hold cash when inflation goes up over 3% a month? Yeah. Well, you know, will we get to that point here? Boy, I tell you what, with the aggressive move that the Fed just did, which was cutting by a full basis point, which was no real shocker, right? We were expecting that to happen on Wednesday anyway. It did over the weekend. You know, obviously that could potentially usher in inflation, but let's not forget from 2009 to 2015, we were at the same interest rate. It's the QE, the pumping in of capital that the Fed is doing to try to prop up the markets. And I have to just take a step back and wonder how stupid of a decision that is. What do I mean by stupid decision? Obviously, we want, as an economy, as a country, as an American, to keep everything going and moving to the upside. But when you have a pandemic, when you have fear, people don't listen. People are irrational. I mean, if you look at what's going on with the grocery stores, the whole toilet paper thing, the amount of memes going on about toilet paper is, it's amazing. And it's humorous. I love reading every one of them. And I see people at the stores. I went to Costco over the weekend, and first thing they said is, we're out of Arrowhead water. I understand water is important for life. And we're out of toilet paper. Really? I mean, it just seems really stupid. How about food? Running out of food might be an issue, right? I don't know. I'm not in the camp of jumping on the whole fear bandwagon and making the worst of a situation. I think that if we just step back and think about it real quickly, everything will be fine. It's not going to be the end of the world. Going back to your question, inflation, will we get that hyperinflation from it? I don't know. I don't think that the Fed's action is going to prop up the market. They do this rate cut right in the middle of a panic. So you basically have let's just say the example here would be this. You have a crowded movie theater packed to the gills with people. And all of a sudden, somebody starts screaming, fire, 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 and you see a video of a flame on the screen. The entire theater right now, there's a few people that started running, and maybe somebody smelled some smoke, and all of a sudden, it's a stampede out the door. What the Fed is effectively doing is standing outside the door going, I have free popcorn, I have free popcorn, anyone want free popcorn? No one's listening to the Fed. It's insignificant, the action of cutting by a full basis point at this point, because it is irrational market-driven movements. Now, honestly, the best thing they would have done, in my opinion, would have been to wait for this to settle a little bit. The markets would probably have dropped a little bit deeper, and then once the panic selling stopped, Then you come in, you support the market when people calm down. I mean, it's critical that people have to calm down about this, and especially when you start looking at the mortality rates, we start to look at how quickly it's spreading, and just the dangers of this virus to begin with. Now, again, I am no CDC expert, but been doing a lot of research over the weekend on this one, and we're looking at a 0.5% mortality rate. If the hospitals are packed, you're looking at 4 or 5%. Let's just start that discussion and go to our presentation today. It's like showing more panic by the Fed. I agree, AVP. I think that is absolutely right. And our politicians, right? Our politicians should be just really trying to calm everybody down right now. Even if they're panicked, they should calm everybody down. All right, TJ, bring me up there's two things I want to start with. Number one, we'll start with economic data just because I have made the point that I think that the real problem is going to happen on Q1 earnings, which starts in April. Because if you look at what's happening right now, you have markets are shutting down. You have no movies. You have no theaters. Garcetti out here in Los Angeles today said cutting down, closing all bars, restaurants, which I find hard to believe, and gyms and things like that. You start shutting all that down, those are all businesses that for an indefinite amount of time, could be a week, could be a month, could be multiple months, will have no income. That is going to have a huge impact on our financial numbers when earnings are reported in Q1. We really haven't seen anything yet that gives us that metric of pain on the economic data. Today, we did get one release, which is the Empire State Manufacturing Index. Now, what I have here is a chart that goes all the way back to, are you kidding me? I didn't go back to 2009. I'm an idiot. Ugh. Oh, sorry, guys. I thought I had this all the way back to 2009. In the chart that you're seeing here, guys, this is the Empire State Manufacturing Index, and I apologize, I don't know why I did not go back to 2009. What we're seeing here is all the way back to 2016. Let me just bring it up from the source, just so I can make sure I get you guys the right chart. There you go. It's not going to be as big, but at least you guys will get a chance to see it, the data that I want you to look at. Okay. So you notice this big blue bar right here that TJ has his cursor on, his little fingers pointing at it right now, right? That was the number that came out today. We were kind of holding above zero. And you guys have heard me talking about how I believe that manufacturing is critical to the growth of the economy. Even though it wasn't robust, it still was above the zero line with an occasional dip below. Well, today's number came out very weak at negative 21.5. Now, you have to ask yourself, why is that important? Why is 21.5 critical? Well, it's basically saying that this market is expecting much worse because they survey about 200 manufacturers in the New York State and they ask them about general business conditions. We're talking about spending, hiring, investment, etc. So when those numbers come out bad, that could potentially start a new move to the downside, and that means economic slowdown. So we're seeing the first little hit here on our economic data, but notice we're still a long ways away from those 2009 lows. However, this is just the first month that we've been dealing with this coronavirus, right? We got the first announcements in December. So I think that these numbers will start to show worse. The one I'm really concerned with will be next month's unemployment rate. We're at 3.5% right now. My guess is you could see a significant spike in that unemployment rate. If that happens, expect this data to turn south for a lot of other readings. All right, that said, let's go to the topic du jour, which is looking at past pandemics or plagues, because pandemic is kind of a rare breed, where we have had the media spread this concept that we're all going to die, we need to be extremely careful, and hand sanitizer and runs on toilet paper and all that stuff. It's happened a few times in the last few years. Of course, it's been the course of history. We've always had some sort of plague or disease or something. That's just part of human nature and evolution. So let's take a peek at the death tolls from some of the major ones out there. Now, I was hearing numbers, several million people going to die from coronavirus. Hold your horses there. Let's just go back and look historically what some of the worst ones are. Then this is all courtesy of Visual Capitalists. I encourage you guys to check out some of their material. It's absolutely fantastic. So this is their graphics here. Black Death, the bubonic plague, 1347 to 1351, 200 million people died. That was the worst. You have smallpox as a more recent one, 1520. 56 million people die. Of course, the one that everyone kind of has fresher in their brain because it happened recently. 1918 and 1919, the Spanish flu, where between 40 and 50 million people died. Of course, when you hear numbers like that, it starts to send off thoughts of, oh my gosh, we're all going to die, and understandable. I mean, these were back in the days when we didn't have really good medicine and biotechs and pharmaceuticals. We have better healthcare, hygiene, et cetera now, so this should not happen to the same extent. It's amazing how the flu keeps coming up over and over again. here are the more recent ones, and I'm going to flip through these and focus on some of the more recent ones. The one I want to start with is the Asian flu. I'm really going through ones that are like from the 1950 forward that have a significant death toll, just to see what the impacts are of the market. Now, I'm not trying to be, a non-compassionate human here, but obviously if I can find a pattern or something that happens when we have these plagues or pandemics, and I can capitalize on that through market actions, then of course that is better for us. So first one I want to focus on is the Asian flu. I'm also going to focus on the swine flu, where it says 200,000 people died, although I'm seeing conflicting information on that. That was probably one of the more recent ones in 2009 and 2010. And then we have Ebola, which had 11.3 thousand people passed away. That was from 2014 to 2016. And here you can see the coronavirus. So we'll look at those four things right now. Start things off with the Asian flu. Asian flu was 1957 and 1958. Now, I left this without marking it on here, so most of you can probably already start to formulate an opinion in your head saying it didn't seem like it was that bad because the market shrugged it off and it kept on going. Where exactly was it, TJ? Well, that's where it was. It was right in the middle there of 1957 to going into 1958. It was a 21% slide in the markets, but notice that the markets got right back on their feet. They were on a really big uptrend and continued for quite some time. Now, I take that with a grain of salt because obviously the 1950s were a very different industrial and business-driven period, but we still had a 21% drop. Now, we'll move forward to, let's say, the swine flu, H1N1. Some of you might remember that. Now, here we can see the chart, which shows actually the bottom of the markets in 2009 as we started our rally, and you're probably trying to figure out in your head where exactly was that swine flu on this chart. Was it during this major sell-off over here in October of 2008? Well, let me show you. It was April 2009 to April 2010. Where was that? It's this line right here. So even when we had swine flu, which had 200,000 deaths reportedly, the markets rallied 55%. There is a point to this, I promise. Now, Ebola. Here's the chart of Ebola. Ebola was way back in 2014. I'm being sarcastic because it's not that long ago, but remember Ebola was a major one that people were freaking out about. So where do you think it is on this chart? One way you can find out is by looking at the volume at the bottom. Quite often you get climactic volume or a buildup of volume as people get scared and panic, which is what they've been doing in this current market. Ebola was started September 30th, 2014, and that would be right here. That was only a 9.7% slide, but the market shrugged it off and continued to rally. Keep that in mind as you look at these things here, because most of the ones that didn't have a big impact were during major market uptrends. That's Ebola. Now, COVID-19, the coronavirus. Looks a little bit different. Obviously, this sell-off is much more dramatic than what we've seen in the previous three examples that I looked at. And it's also happened much faster because in the previous ones, in swine flu, in Ebola, there wasn't the full-on lockdown of cities and closures of infrastructure, which we're seeing now. So this obviously is being much more of a catalyst to the south side. What was it? Well, we really started December 31st. There were 11,300 deaths, but that number is literally changing every minute. My guess is it's probably closer to 13,000 deaths at this point. I'm making a guess, but I'm sure one of you guys will give me the exact number because you can quote things as I'm talking and trying to do all this stuff here. But that's a slide of 30.6% as of close today. That's a pretty extreme number. I mean, we're seeing a major drop in it. Now, the two things I want to make point here are where and when these things happen. So let's go back to our real-time charts here, TJ, if you wouldn't mind. Let's go back to, yes, and Brendan, you're going to the point that I wanted to get to. And let's see, I'm going to have to go to a different chart here, and we'll go to, let's just say, let's do that ES. I'll make it full featured here, just because I need to go look at historical data. So let me go and change this to, is it a monthly? So let's go back on the S&P. Does it really stop there? All right, well, I guess we'll have to go to the Dow Jones Industrial Average. On that DJI, when we go back to the Asian flu, which was 1957, 1958, let's take a peek at where we were in context. Look at the uptrend. I mean, we were really, since 1949, huge move to the upside. I mean, the Dow went from 165 to 1,000 in a period of, let's call it 11 years. Now, granted, that's a big time frame, but we were in a big uptrend, and it kind of shrugged it off. Now, the second one, which was the swine flu, I want to make sure I get these right. Swine flu, keep going. 2000 and there you go. That was after an aggressive sell-off. So as Brendan points out, Merlin, he says 2009, 2010 was right after massive QE. Fed doesn't have the bullets left anymore. Exactly. So this is kind of putting different pieces of different puzzles together to create the picture of what's going to happen next. Brendan's right. From that 2008 crash, we were aggressively slashing rates. We got down to 0 right here. So it's not that the swine flu was insignificant. It's just that the market had already discounted in so much cheap money and had fallen so fast that people came in and were buying a discounted and undervalued market. Also, the death toll wasn't that high from the swine flu. You go to the other one, which was the Ebola. Like Ebola only killed one person in the United States, confirmed death. I think 11 people got sick. Not that big of a deal, and that was here from 2014. So no biggie. Where we are at today is a different picture. I wanted to bring up the point of being in a major uptrend because I think it's critical to show that if something's in a strong uptrend, that it seems to be that it shrugs off this market move, right? It'll shrug off the pullback. I don't think you're going to see that one. I think of all the four that I've just mentioned, which is the swine flu, the Asian flu, Ebola, and COVID-19, this is a totally different ballgame. This one is an outlier because of we are shutting down industry. We're shutting down America. And let's be honest, a show of hands, how many of you think that in the next 24, let's go 48 hours. So by Wednesday, how many of you think that the President of the United States will order a state of emergency and order us to stay home? I mean, I'm not, like I said, I'm not talking about troops rolling the streets in tanks, but basically saying, look, everybody stay home. If you have a job, you either work from home or you're not working. You're not going to public places. How many of you think that's going to happen in the next 48 hours? Anybody? Bueller? See if I can get some feedback from you guys on this one. Yes, this was also the fastest and deepest peak to trough decline in all of history I checked. Yes, you are totally right. And I do think it's going to get worse. I think we're going to see systemic shutdown, maybe runs on banks. We've already seen runs on grocery stores, and we're seeing people doing very, very stupid things. I had to talk with a friend of mine last night who was almost hyperventilating because she was just not, she's like, I'm scared, I'm panicking. I said, relax. If you want, come over, have a glass of wine, we'll watch a movie, chill. It will be okay. You're young, you're strong, you're healthy. Cool. Oh, thank you guys for participating. Basically, AVP says maybe Wednesday, maybe Friday. Almost all of you are saying no. Gayer says no. Gayer, you're not even our country. You don't get to vote. No, I'm kidding. I hope the medical cannabis order comes before. Yeah, they will shut down all domestic air, not U.S. shutdown. I don't know, Big Eb. I really do think you're going to see the quarantine level like on a strict basis here in the U.S. It's going to be interesting. I don't know what the future holds. I will tell you that I do personally think we are going to be going much lower on these markets. I think that the numbers are going to show up later on. The question becomes, and I'm looking forward to having John O'Donnell on the program, is does this act as a catalyst to put us into a recession? I believe so. Does it get to the point that it actually puts us into a depression? Tricky to say that one because I'm going to do two different analysis here, and I know we're over the clock time, but oh, Guy, you're in Los Angeles? I thought you were in Norway. Oh, all right. Well, welcome to the U.S. Welcome to Quarantineville. Okay, hear me out, guys, for a second. I got two sides of the equation here. There's the cynical side that says we're going to hell in a handbasket for this reason. Number one, we have everything being shut down. And it could be to the point now where almost everything non-essential is shut down. Number two, layoffs are going to start to happen, which will further exacerbate this problem, which I like to call the downward spiral, which is all of a sudden you have people who don't have any money. Now they don't have a job. They can't refinance, but they don't have a job. Now all of a sudden they spend what? They spend less. And this cycle starts aggressively, and it could very quickly put us into a depression because we don't know how long this would last. The other side of this, and of course there's other factors, but for the sake of time I'm cutting it short. The other side of this says, look, people are not spending as much. They're not going to basketball games or hockey games. They're not going out and buying at restaurants all the time now. They're really cutting back. I went to lunch today with my boss, and the place is empty. Normally there's a line out the door. It was like a few people in there, but it's crazy seeing the impact of this situation. So maybe people will have a lot more money. They're stocking it up so they, keep that little nest egg there for emergency needs. And when we form a bottom, it could be an aggressive V bottom where we come ripping back up because the Fed is just slashed by 1.5 or 150 basis points in a very short period of time. That could be a huge pop to the upside. So I'm not sure which side of the camp I fall on. My gut tells me it's going to be a little bit more prolonged pain because of the uncertainty of how long this virus is going to be there, or if it ever goes away. I mean, the flu is a virus, and we can't seem to fix that one either. So who knows how long it will be. And we have to just trade accordingly. If you guys have trade set up, be sure that you have a plan in place so that you don't get caught on the wrong side of one of these things. Let's see, back to the basics. Yeah, thank you, Trader Merlin. I got someone speaking for me over there. Yeah, if you guys like today's show, please give us a thumbs up. 7 months from now is a buy, in my opinion. I think you might be right, Brendan. Trent says unemployment report will be crucial in April. Yes, but what will happen, here's what, and Trent, I think you're totally right, but here's the extra addition. When you look at the earnings announcements that are going to happen in April, my gut tells me you're going to see companies getting half to a quarter of their expected earnings. Why? Because they can't do business. I mean, if we shut down all domestic airfare, what do you think is going to happen to United and JetBlue? I am currently long. Actually, I closed out of my calls on American Airlines today. I'm still holding. I sold puts on United Airlines last week. I'm still holding those ones. Just in full disclosure, letting you know my positions. But I think you could see just dismal numbers at that point. Then you'll hear them say they're going to make layoffs, which will now push that sell-off further down, right? If they do their layoffs now and then the earnings come out and they're bad, that's one thing. If earnings come out bad and then they do a huge round of layoffs, you see how that kind of prolongs that depression, that cycle of downward movement of unemployment. So to me, that's the tricky part. There will be some bumps higher along the way. Absolutely. I'm hoping that we will be able to get short during those bumps. Nick says Trump says it will end in July or August because Trump is the most educated person on infectious diseases on the planet. If there's a great podcast out there by Joe Rogan where he interviews a guy from the University of Minnesota who his whole life has been studying infectious diseases. So I would take my advice from somebody that's their life, as opposed to somebody who's just being fed information to make us all feel warm and fuzzy. Take everything that government says with a grain of salt. Their job right now is to calm everybody down. Maybe I'll see if I can post a link on my Twitter feed because I do think it's a good watch for you guys. Go out there and check it out. I'll do it after the show today. And basically this guide says, look, there's a couple things. Number one, eat right. Exercise, get a lot of sleep. The key is to make your immune system as strong as possible because if you do catch this thing, and I don't know anybody who knows anybody who's gotten it yet, but it will probably hit someone, you want to make sure your immune system is strong. Now, I'm a weekend drinker. I like to go out and have a couple cocktails, have some dinner, hang out with friends. Alcohol weakens your immune system. So you know what? You might want to put that on hiatus for a little bit. A couple beers here and there, but don't get blotto drunk on the weekend because now your immune system will be compromised and you're much more susceptible to it. He also says, you know what, you just got to be careful about your surroundings. Obviously touching your face is a way to contract it, but it is kind of airborne as well. So we want to be careful with our personal spaces. Other than that, some of the statistics he pointed out saying mathematically he's looking about maybe 400,000 deaths from this one. So it could be pretty ugly. Don't forget Bitcoin and Ethereum are on sale. All of it's on sale, and there could be much bigger sales coming up here. Josh says, will we see limit down every day this week? I don't think you'll see it every day because we're going to have some upsides too. You notice what we had on Friday was just a monster 11-point rally in some of these market indexes. We'll have that. So those won't be limits, but I think you will. I think for the next month or two, a lock limit down in the pre-market is going to be natural and also maybe circuit breakers during the day. I was really thinking we might get that 13% circuit breaker out there today, but we did not. All right. Let's see, I got any quick questions? TJ, are there any questions that you saw that were good that I could read? Are you even following along? Yeah, there was some good ones? He's nodding over me. TJ doesn't want to talk today. Let's see.
You're pretty much seeing them.
Okay. Well, I'm juggling so many things over here, so.
I know. I'll keep looking.
Jerry, that's pretty funny. I heard Mexico's building a wall, and they're going to pay for it too. Yeah, right? Believe everything we hear, right? All right, that's going to do it for today. I'm going to do a slightly different show tomorrow. Obviously, today I want to do talking just to show some of these historic ones because it's nice to put it in context, even though I think that it's not a fair evaluation, right? We looked at 4. We looked at Asian, we looked at swine flu, we looked at Ebola. Those were really, for me personally, nothing compared to what we're seeing right now. And if we had the same level of media fear-mongering, I think that the swine flu would have been the exact same situation as this. Far more people died from that. We don't know what the final numbers of this will be. All we can say is be careful out there. It's funny, my friend from Italy is staying with me, and he may have a hard time getting home. But I joke because the Italians have a way of greeting people. Like in America, we'll like give you a high five, a fist bump or something. In Italy, you kiss everybody on the cheek. You meet somebody, you get one on each cheek. It's like, you wonder why this is spreading so fast over there, guys. How about you just stop kissing each other for a little while? I'm surprised that France hasn't blown up because they kiss each other 3 times. Twice on the right cheek and once on the left cheek. I know, that's just kind of cultures are an interesting thing. But, don't go out there and be kissing everybody on a daily basis. You'll probably be fine. Hopefully none of you get it and all your family and friends are safe as well. All right, Joe Rogan podcast is almost as good as... Thanks, Big Ab. I aspire to get to the point that Joe Rogan is at. He is obviously the king of podcasts out there. But we do a little bit better visual, I think, than he does. All right, that'll do it for today's show, everybody. Tomorrow, I've got a great guest. We're going to have Sam Evans on the show. I won't be going through a specific topic like we did today. We will be going through currencies, kind of like we did back in the day. I'll start off with a profile of Sam because most people might not know who Sam Evans is. So we'll get an idea of who he is, how he trades, what's his style, what his currency favorites, and then we'll go into market analysis. If you have a Forex pair you would like us to analyze, do me a favor. Go to TraderMerlin.com. Click the little button there that says send us a comment or suggestion or message or something like that. Send it on in, and I will read all those and hopefully get all those currency pairs lined up for today. Of course, you can always join us live on our chat tomorrow in the YouTube channel, which is going to be under Trader Merlin Show. You can go there and just type in your questions, and hopefully we'll get all those answered on air. We'll do a full show of Forex analysis tomorrow. Thank you guys so much for joining us today. Hopefully you're safe, and I hope that the show gets to run tomorrow. There's talk about everything being shut down. That may impact this show. Right now, I do not have a studio set up in my house, but I assure you guys, my goal is to get some money and go and set up a studio in my house so that I will have zero interruption in broadcast regardless of what happens, quarantines, civil unrest, whatever. I'll be broadcasting live every day. All right, that'll do it for today, guys. Thank you so much for joining us. We will see you tomorrow. Take care.
The Trader Merlin Show is produced by Merlin Rothfeld, Gary Christmas, and TJ Writings. The show is engineered and edited by TJ Writings. For more information, visit TraderMerlin.com.